Marriage offers profound property tax advantages, affecting income tax, capital gains tax, inheritance tax, and more. Couples can maximize reliefs, allocate income wisely, and transfer assets without incurring tax liabilities. The concept of marriage extends beyond emotional bonds and often opens the door to a plethora of financial benefits, particularly in the realm of property taxes. Couples usually overlook the significant property tax advantages that come with being married, but a thorough understanding of these benefits can bolster their financial planning and long-term wealth. One of the most notable property tax advantages associated with marriage involves income tax. When a married couple or civil partners co-own a rental property, the income generated from rent is typically taxed evenly, regardless of their respective earnings. However, when couples own a property where the ownership share may differ, they have the option to make a declaration using HMRC's Form 17. This form allows the couple to declare that the rental income or losses should be allocated based on the genuine beneficial interest in the property. This strategy can be particularly beneficial in cases where one spouse is a higher-rate taxpayer, while the other falls into a lower tax bracket or is a non-taxpayer. By allocating a more substantial portion of the rental profits to the spouse who pays a lower rate, the couple can significantly reduce their overall tax liability. It's essential to remember, however, that to take advantage of this option, the Form 17 must be submitted within 60 days of signing a declaration of trust or a deed of arrangement. Failure to adhere to this strict timeline can result in the couple being taxed on an equal share of the income, regardless of their actual financial contributions. Another critical area where the property tax advantages of marriage can manifest is through capital gains tax. When one spouse transfers property to another, it generally takes place at no gain, no loss, meaning that the transaction does not incur CGT at the time of transfer. This is an essential benefit because it allows couples to structure their property holdings flexibly, enabling them to optimize both individuals' annual CGT allowances. Essentially, if one partner has accrued significant gains and the other has incurred losses, transferring ownership can help mitigate tax liability. This inter-spouse transfer strategy is particularly beneficial when navigating the complexities of tax allowances. Married couples can strategically use their combined allowances to avoid having one partner face an excess gain, while the other enjoys unrelieved losses. However, couples should exercise caution, as the targeted anti-avoidance rule can potentially complicate straightforward transactions, especially those involving loss-making assets transferred within the same tax year. Seeking professional advice in such situations is prudent, as it can ensure compliance with regulations while optimally managing tax liabilities. In terms of inheritance tax, IHT, marriage provides perhaps the most favorable property tax advantages. Typically, any legacy transferred from one spouse to another is free from IHT, which means significant savings can be realized. If the first spouse to pass leaves their entire estate to the surviving partner, this can further enhance tax savings, as the nil rate band from the deceased spouse can be passed on to the survivor. This provision allows couples to better manage their estates and ensure that their wealth is preserved for future generations without incurring unnecessary tax burdens. While stamp duty land tax is unaffected by marital status, understanding its implications is crucial for couples. SDLT is charged based on the purchase price of the property, irrespective of whether a couple is married or not. However, SDLT does not apply to the inter-spouse transfer of property unless a mortgage is attached. If one spouse gifts a property share to the other and there is a mortgage on the property, the recipient is considered to have taken on that proportionate mortgage liability. Therefore, important financial considerations must be taken into account if the property value exceeds the current SDLT threshold of £250,000 for residential properties. Making gifts of property presents another opportunity for couples to leverage property tax advantages. Spouses can transfer property between each other without incurring tax, which can be particularly useful when planning for the future or selling assets. However, it is imperative that such transfers are conducted as outright gifts without conditions attached, Otherwise, it may invoke anti-avoidance provisions. Caution is warranted, especially during divorce proceedings, as property division can lead to unexpected tax consequences depending on asset sales or reallocations. The relationship between property transfer and tax liability is further complicated by cases like W.T. Ramsey Limited v. IRC, which highlights the need for HMRC to look beyond individual transactions and scrutinize their overall purpose. This case, among others, highlights the importance of couples adopting a comprehensive approach to financial planning, rather than taking isolated actions. The property tax advantages of being married are both substantial and multifunctional. Couples can significantly benefit from various tax allowances and reliefs while optimizing their financial positions together. From strategically allocating rental income to potentially avoiding CGT on asset transfers and maximizing exemptions available through IHT, marriage can be a significant advantage in property tax management. For those navigating these intricacies, understanding these advantages will prove invaluable in making informed decisions for the future, underscoring the importance of financial unity and planning in marital partnerships. If anything I've written in my blog post resonates with you and you'd like to discover more of my thoughts about the property tax advantages of being married, then do feel free to call me on 07434 28763 and let's see how I can help you.